Hello and welcome back to our YouTube channel. Today we have for you a pharma stock that we think is very undervalued in its segment. With Trump posting tariffs after tariffs to all the countries across the world, we have the dollar index that is strengthening day by day. So we are looking at companies that will benefit from the dollars going up and the dollar price going up. And we feel some of the segments are very undervalued right now. With the dollar going up, some of these companies don't have to do a lot. Just them doing their normal business would incrementally give them a 5 to 10% bump in their bottom line. So, we have for you today a pharma stock that we want you to explore before taking your investment decision. The stock that we have for you today is Natco Pharma. Natco Pharma is a vertically integrated research and development focused pharmaceutical company which is engaged in developing, manufacturing, and marketing of complex products for niche therapeutic areas. Natco has established its presence in all three business segments, that is, FDFs, APIs, and also contract manufacturing businesses. This company was set up in 1981 in Hyderabad and it is focused on mainly R&D. Then it has these other segments that it has gotten into, that is mainly API and the contract manufacturing. It currently has around 5 manufacturing facilities and it has over 3,000 employees employed in its company. Natco is primarily known for challenging patents in India, and in 2012, it became one of the first companies to win a compulsory license from Bayer for its patent protected anti cancer drug Nexaver. Oncology or cancer based medicines actually are one of the primary source of income for Natco Pharma. So a major part of its domestic formulation revenues come from a launch of Hep C drugs in the country. This it is acquired from a licensing agreement from a US based manufacturer called Gilead to manufacture and sell Hep C in over 100 countries. And the revenues from this segment, the oncology segment, is growing strongly as on today and is also expected to grow further in its segment. On the exports front, Natco has a limited presence in the US. Export is about 10% of the sales. Natco also partners with global pharma companies to address the US market. That is where we think, it is going to get the extra bottom line from because of the increase in, the US dollar index. Exports, apart from the US, it's basically European Union, Brazil, Venezuela, and rest of the world. It has a presence of around in around 40 countries as on today, and it accounts to about 15% of the sales of Natco's export wing. 60% of Natco's ANDAs are backward integrated. First, let me tell you what is ANDAs. Yeah, ANDAs stand for New Drug Application, and its request to the FDA to approve a generic drug for manufacturing and marketing. Basically, a company formulates a drug or sometimes acquires licenses from a company which has actually formulated a drug, then it applies for a UNFDA license, then it gets approval for a certain drug, then it is allowed to sell in certain countries that is being regulated from US FDA. Okay, so this is the process. So basically, Natco generates a drug, then it applies for the license, then it starts selling, marketing, and manufacturing that drug. That is the process, guys. So this company is applying for all these, licenses for drug formulations, and it's going about with its business. So Natco has currently a portfolio of 38 niche, ANDA filings in the US, including 16 Para 4 filings and 36 USDMFs filings. So basically, it has a lot of drug formulations that has already been approved, and some drug filings which are in the pipeline of getting approved, and then it has drugs that it is developing, which is on the way to getting approved by the US FDA. Now that you know what Natco Pharma is and what it is into, let's look at the financials and the stock of Natco Pharma. So the market cap is around 23,000 crores and the current price stands at 1,319. Okay, the high and low being 1,600 and 828. The PE is very, very modest at 12.2 and a book value of 399. A return of capital invested, okay, is around uh, 30% and return on equity is around 25.9%. The PEG ratio, however, is at 0.71, for which we feel that the stock is undervalued currently, and we feel that this stock can revaluate itself, and we feel some of the levels that we have on the stock are highly undervalued. So let's look at the chart. If you see from the last 5 years, the stock has barely done anything, 10-20% here and around to the investors. Let's not look at 5-year chart. Let's look at 10-year chart. Even then, you will see that that the stock has gone from around 600 to around 1,200. That's close to double from 2016 levels. So we are in 2025 right now. So give it give or take like about 9 to 10 years, the stock we can say that has doubled in 9 years. But the revenue and the profitability will show you a very different scenario altogether. So if you look at the annual profit and loss statement of 2016 and 2017, you can see that the sales were around 1,000 to 2,000 crores. Okay, and in and around 2016, the net profit was around 156 crores. So compare that to March 2024 profits of around 1,300 crores. That is around 10x, guys. So 10x from March 2016 to March 2024, but the stock has only doubled. You can see the EPS growth as well, from 9 EPS to around 77 EPS. Okay, so that is close to 9 to 10x in sales, in EPS, in bottom line, and see, this is why we feel that the stock is undervalued. And one more thing that I want to show you is the quarterly run rate. So from September of 2021, you can see that the sales has been constantly revving up from 377 crores to around 1,371 crores as on September of 2024. And the bottom line as well has 10x in this very short period of time. That is from a net profit of a modest 65 crores to around 676 crores. That is 10x, guys, from 2021 to 2024. Okay, you can also see that the pairs of Natco Pharma are all trading higher and all trading at higher valuations. Even if you look at Sun Pharma, Cipla, Dr. Reddy's, all of these companies are trading at around 30 to 40 P, whereas Natco Pharma is trading at a very modest 12 P. So that is why we feel that the re-rating is possible in the stock, and we want to have a position in the stock so that we are also benefiting from the re-rating of the stock. So if you look at the compounding sales growth, like I said, from the past uh, 3 years, it is about 25% CAGR, and the compounded profit growth is around 49% CAGR, and the stock has absolutely done nothing in this time, and it's about modest 13%. So that is why we feel, the stock is currently very undervalued, and we feel that, it's the right time to take a position in the stock. So let me tell you more things about the company now, before you have a complete detail on what they're doing and what they're planning to do, what is their capacity, and where the money comes from for this company. So let's start with what is making money for this company. If we look at the revenue breakup for this company, so pharma export formulations give about 76%, the domestic formulations give about 13%, APIs around 6%, and agrochemicals around 2%. So let me tell you something, guys. So they have this drug called Revlimid. Okay, so this is where the majority of the money is coming from. If you look at just this one Revlimid, it is getting the company around 63% of its top line. Imagine one drug, guys, getting 63% of its top line. It is also contributing about 71% of the bottom line. That is one drug. The problem is, it is a good thing and a bad thing. See, when I showed you the revenue and the profitability chart and how it is 10x from 2021 to 2025, the majority of the share and the majority of the credit goes to this one drug called Revlimid. Okay, so it started giving revenues in and around the financial year 2022, and since then the top line and the bottom line of this company is on a dream run. Okay, the good part is it is still driving the revenue single-handedly, and it is providing about 60 odd percentage to the top line. But the problem is the patent gets over by FY26. Okay. Now, when you say that something gets over by FY26, then you can ask that what next? How can something that is, contributing up to 62% of the revenue be replaced? See that the company says can be done. So that is why the company is foraying itself into multiple things right now. If you look at the segment, see now it is forayed into APIs. It is around 6%, or that is contributing up to the revenue. Then you have agrochem business that the company has just started now and is just blooming, and it contributes around 2%. And the company also, my friends, has around 2,000 crores of cash, which we expect it to grow around 3 to 4,000 crores by the end of FY26, where in which the Revlimid, tenure will get over with, and the patent will be done. And then they expect all kind of, competition to come in from the likes of, your Dr. Reddy's, Cipla, and all kind of companies that will come and compete in the segment. So basically their margins will drop, and they might not even be competitive in the Revlimid. Okay, so that's why the company is using its power to keep itself meaningful after FY26, and they want to keep the growth rate in both the bottom line and the top line. So they forward into something like API and agrochemicals, which they see future in, and they're consistently putting money into these segments. Okay, if I just can give you gist of how Divi's Labs became such a big company today, it's all because of API. So this company also, coming from Hyderabad base, wants to try its hand in APIs and then also agrochemical business going forward. So the domestic formulations are anyways contributing around 13 to 14%. Then it also has a lot of drugs which is getting patented or in the pipeline. So we can hope that any of these big drugs get USFDA approval, and then it can all again continue a dream run like Revlimid. This is the chart that indicates the revenue from the export formulation business. So if you can see that, the revenue was constant in and around dilly-dallying from 891 crores to around 1,000 crores, or, in FY21. And suddenly from, FY22, because of Revlimid, the revenues have 3x in just 3 years. So that is the main plus point and the minus point of the business, guys. So pharma is a very risky segment, wherein which the company has to tie up with different multinational companies for its foray into different geographies. So which we can change, which we can talk about over here. Here, if you can see, it is partnered with Alvogen for oselmatare or Tamiflu drug, in around 2016, and then partnered with a US giant called Mylan for glatiramer acetate, in and around 2017, or with Teva for lenalidomide or Revlimid, which we're talking about in 2021. So this is what Natco Pharma does. What it does for the company is the cost sharing and risk mitigation. Filing a powerful molecule involves fees like filing fees, legal and patent fees, then the litigation costs. So the partnering with US companies helps it, share these costs, and then the distribution and the marketing capabilities of partner companies like Mylan or Teva also helps Natco Pharma grow effectively in these markets. Now, if Revlimid is not contributing to the revenue after its patent expiry in FY26, let's look at what is in the pipeline for the company, and let's see what it has to offer, other than Revlimid. So these are the key product pipelines in the USA where the export molecules are there. So there are multiple brands under which the Natco Pharma is selling, and this is from their earnings presentation. You can see the name of the molecules and which segment they are in. So all these are in the pipeline. So out of which 14 have been approved or tentatively or fully, and the others are getting approved or in the process of getting clearances from various US FDA regularities. Okay, so this is what we need to look at. So these things, if they have to replace Revlipid and there is no change in the revenue and the bottom line as well, it will be a very good thing for the stock as well, because it will be that the revenue is increasing and the stock price may also increase in due course. So this is something that we need to keep ourselves updated, and this is also what we think as primarily risk for this company, because we are in FY25 right now. So let's say that maybe for a year, I think still the Revlipid story will still develop, and the stock is also undervalued quite a bit. But post that, will the stock go forward is something that we need to look at. And that is also maybe why the stock is also not moving, in my opinion, because of this risk that is hanging on its head. But by chance, any of these product pipelines, something comes up and has the same story like Revlipid, then there is a constant re-rating that needs to happen in the stock, and we will look at very good levels coming in for the stock. This was Natco Pharma for you guys. We expect the valuation, that discount that this company has. Because of that, we want, to see better things coming in this company, and we think the stock will do better as well. Based on the valuations right now, so we have a target, a modest target of around 2,500 for about 1 to 2 years. Then we have a target, a longer period target for the horizon of 3 to 5 years. Uh, which may go around 4,000. Right now, we feel that the stock is very undervalued. So you can have your own research on this and also understand the risk that the Revlipid has with this company. And then you can do your own analysis and then take your position. You can also talk to your investment advisor before you take a call, because you're investing your own hard-earned money. We want you to be very careful with the kind of investments that you do. Please don't take any of our investment advice. These are for educational purposes only, and we like to analyze stocks which are undervalued, and we want to hold our own positions in these stocks. Also, we have been getting messages about the stocks that we had suggested, and we will be updating about these stocks at the end of all the videos that we do. Please have a look at them and see how they are performing in such a bear market. When you see that all the stocks in the market are, minus 20%, 30%, you can see that our stocks are either flat or doing are in positive territory. Okay, so please have a look at these stocks as well. And if you feel like, getting into them, feel free to get into it, at your own risk. But please make sure to be very careful in this kind of market where it's very volatile. So take your decisions very carefully. Also, don't forget to like and subscribe our channel. And if you like a channel, please make sure that you share it with your friends and family as well. Thank you.